Bitcoin and other cryptocurrency platforms such as Ethereum, Litecoin, Bitcoin Cash, Binance Coin, Chainlink, and Polkadot are being increasingly adopted by a diverse group of users across the globe. While 2020 has been a very difficult year, it has ironically been a catalyst year for fintech and crypto. And there are no signs of the momentum slowing down in 2021. Here are the top 10 crypto predictions for 2021. If you're a subscriber, well, welcome back to Investing View. But if you're new to this channel and you want to enjoy more of our engaging content, make sure to click that subscribe button and use that trigger finger by smashing that like button. Now, let's get into it. 10. Expect more progressive crypto regulations in 2021. As we head into 2021, leading digital asset exchange Binance has announced that it plans to continue taking regulations more seriously, but multiple warnings from regulators suggest otherwise. This year, we can expect a lot more regulatory scrutiny, especially from regulators like the US Securities and Exchange Commission and also from UK's Financial Conduct Authority, which has also begun to crack down on unauthorized businesses pretending or posing to be licensed. As the digital assets and distributed ledger technology industry continues to mature, we can expect that regulators will develop a much better and clearer understanding of these open-source protocols. With more awareness of how these technologies will impact the broader financial markets, regulators like the SEC and the U.S. Commodity Futures Trading Commission can begin drafting more suitable guidelines for blockchain and crypto assets. Number 9. We can expect more companies to add Bitcoin to their balance sheets. Many companies have come forward to add Bitcoin to their balance sheet. Business intelligence firm MicroStrategy has now added billions of dollars worth of BTC to their treasury. Several other large firms have done the same or are planning to do the same in the future. It appears that this trend began to really take off in 2020. When awareness about the coronavirus crisis became more widespread in late February and March 2020, and the global financial markets crashed to historic lows, many more individuals and businesses realized that they needed to explore alternative forms of investments and look for other ways to hedge against unprecedented levels of volatility and economic uncertainty. Number 8. Expect Bitcoin to be used more often as store of value. While other digital currencies such as Bitcoin Cash, Litecoin, and Bitcoin SV allow investors to diversify their investment portfolios, these assets have not been proven to be legitimate alternatives or options when it comes to serving as a reliable long-term store of value. Only BTC, which has the world's largest and most secure crypto network, and potentially Ethereum now to some extent, have shown that they're able to hold value and even appreciate in value dramatically over long periods of time. According to well-known investor Raoul Pal, there's no other asset besides Bitcoin and Ethereum to some extent that can potentially deliver 10 times or higher returns within a span of a few years. Paul, who now holds the majority of his net worth in Bitcoin and Ethereum, believes that these assets provide an excellent risk-to-return ratio. Number 7. Expect Ethereum-dominated DeFi to gain more users and use cases. In addition to cryptocurrencies being used as a hedge against the traditional financial markets, which have seen historic levels of money printing by reserve banks across the globe, we can expect the Ethereum-dominated decentralized finance, or DeFi space, to continue to grow rapidly. In early January 2020, the entire DeFi market had only around $600 million in total value locked, or TVL, into various DLT-enabled smart contracts. Some of these platforms like Aave have even managed to acquire an electronic money license from the UK's FCA and have handled billions of dollars in deposits. Uniswap, a leading Ethereum-based non-custodial exchange, is now regularly handling billions in trading volume and offers support for a wide variety of ERC20 tokens. In 2021, we can expect these platforms to gain even more users, and we might see DeFi startups launch even more creative projects. DeFi mania, which really kicked off during the summer months of 2020, was fueled by a lot of speculative trading and investments. Number 6. More DeFi hacks. Security breaches could take place in 2021. This year, we might see a lot more ways that individuals and businesses can borrow, lend, or invest in DeFi-based platforms. But we shouldn't be surprised if this experimentation leads to many more scams and hacks. Andrzej Kronhe, an Ethereum/DeFi architect who's focused on the development of Yearn.finance and Curve.finance, among other initiatives, has even stated that he builds software mainly for himself, and anyone who wants to use it should take responsibility and take precautions as needed. In other words, these open-source protocols require users to accept greater responsibility for their actions, and if they lose their funds, then there's usually no recourse. There's normally no centralized provider that they can depend on to recover their lost or stolen assets, because these platforms are supposed to be decentralized. Number 5. Expect more efforts directed towards greater decentralization and autonomy. The trend towards greater decentralization is being supported by various new platforms that are part of Web 3.0, which is an evolving set of standards for the Internet of the future. While Ethereum has played a leading role in the development of Web 3.0 protocols, there are other blockchain interoperability solutions being launched, such as Cosmos and Polkadot. These DLT platforms aim to provide improved interactions and a lot more compatibility between separate or independent blockchain networks. Although many Ethereum supporters claim that it's not really necessary to have multiple chains, or even think only a very limited number of blockchains are needed to deploy decentralized applications or DApps, many developers are also chain agnostic, meaning they would rather let the end user decide to choose which blockchains they prefer to work with, which could be many different ones at the same time. Number 4. It's still early days, so expect more problems. Since we're so early, there's a pretty good chance we'll see many more technical issues and other types of problems with internet-based platforms, including extremely damaging security breaches, like the fairly recent one experienced by Ledger. As reported, Ledger's customer data, which included millions of user emails and other personal details, were leaked on a web forum. Although user funds weren't stolen due to the hack, Ledger customers received many threatening emails that tried to extort money from the victims. Clearly, these are very serious issues, but they do teach us that everyone must learn to take more responsibility for how they interact online and the type of information they're sharing with different service providers. Number 3. Crypto derivatives exchanges growing up. Outside crypto, the size of the derivatives market is multiple times that of spot markets. This is not the case yet with crypto markets. Although there are many crypto derivatives exchanges, very few of them are regulated or would pass operational due diligence by institutional investors. In 2021, crypto derivatives will be an area to watch. Open interest on Bitcoin features on the CME has recently been at record highs and will be a good barometer of investor appetite going forward. This space still offers a lot of opportunities for firms that understand the institutional grade requirements, from counterparty risk mitigation and high-speed connectivity to being regulated. That will provide great opportunities not only to existing players, many of whom have been institutionalizing quite quickly, but also to potential new entrants and traditional institutions. Number 2. New regulations driving traffic to DeFi. As correctly predicted last year, decentralized finance, or DeFi, exploded in 2020, with total value locked growing from less than $1 billion in January to more than $15 billion today. Some months, trading volumes on certain DeFi exchanges were bigger than those at some of the large traditional exchanges. In 2021, DeFi is likely to grow further. While it is unlikely that we will see institutional investor interest in the sector, the dedicated group of folks from the crypto community working in this exciting area will continue to make breakthroughs. One area to watch will be the impact of new regulations, from the FATF's travel rule to the potential ban of crypto retail trading in certain markets, which may inadvertently drive traffic to such offerings. Number 1. Stablecoins play a bigger role in cross-border transactions. 2020 was a record year for stablecoins, with assets growing from less than $5 billion at the beginning of the year to over $25 billion by December. We should expect this momentum to continue in 2021. All eyes here will be, once again, on Diem, formerly Libra. Diem aims to make sending money around the world as easy as sending an email or a message on WhatsApp. While stablecoins already play a big role in crypto trading, one area to watch in 2021 is whether usage of stablecoins picks up when it comes to cross-border commercial transactions. Data suggests usage of stablecoins is already increasing in certain corridors, where merchants are using stablecoins to settle transactions, completely bypassing the traditional banking rails in the process. In 2021, it will be interesting to see if this trend continues. What can you say about these predictions? Let us know in the comments section below. And hey, if you enjoyed this video, don't forget to like and subscribe to our channel so we can continue giving you the best content. Thanks for watching, and we'll see you in the next video.